everyone, welcome to Morning Trade with Money Control in association with M Stock by Mirai Asset. I'm Karunya Rao and I'm here to help you get started for the trading day with actionable strategies, sectoral trends, and we also answer your queries about all kinds of stocks that you need to know on the show. So please keep commenting on our live feed and we'll have them addressed by our technical expert. Before bringing him on board, let's see what the global handover looks like. Recession fears continue to dent investor sentiment. Europe's closed about slightly lower. Stock 600 was down by about 0.7%, with shares of auto firms shedding almost 3% to lead losses. DAX shed more than 1% and other bourses also ended lower. Key indices on Wall Street closed mixed following a volatile session after Fed chair reiterates the central bank's aggressive stance on inflation. Says policymakers will not allow the economy to transition from the low inflation to a high inflation environment over the longer term. On the economic data front, weekly jobless claims will be in focus. Asian markets trade lower. Meanwhile, Shanghai bucks the trend as data shows factory activity grew in June. For Indian markets, SGX Nifty indicates a positive start. Okay, with stocks logging high double-digit growth, IT stocks, let's understand what's the way forward for investors, whether it's time to buy or further consolidation is likely. Also on the show is IOC, Sterlite Technologies, MDT Tech and Minda Industries. Okay, first let's get going on the IT space. We're being joined by my colleague Madhuchanda Dey from MC Pro. She tracks the IT space very closely. Good morning, Madhu. Thank you for joining in. First things first, I want to know what's causing this sustained underperformance for the IT stocks. This year has been pretty weak, I would say. More than 25% gone off the IT index. So what's your verdict on the underperformance? Is it likely to continue or has it bottomed?
Well, that's a very difficult take. Of course, as you rightly pointed out, the index broadly has corrected by close to 20% in the last 3 months, underperforming the Nifty big time. And within the index and outside the index, the stocks have corrected anywhere between 15 to 30%. Well, prima facie, that looks like a huge correction because we are still in the environment of very strong demand. But as we all know, what is causing this nervousness of the street is the apprehension that there's a looming recession in the US and there is a global slowdown, which will likely impact all markets of this IT service companies. Enterprises are going to feel the pinch of inflation, higher interest rates. They're going to spend less on technology, and hence the demand environment, which is looking red hot now, will not sustain like this. So yeah, to answer your question, whether there is more headroom for correction, I would say, of course, there's more headroom for correction of the markets and IT will not be an exception.
Okay, all right. But, yesterday I was reading this MC Pro report about persistent systems, but that also applies to the overall IT sector because there's no major announcements by leading companies or leading clients about revising their guidance or alarming or flagging off any, any concerns or any kind of an alarm with respect to the growth outlook, even in the near term. So what is it that, why is the market reacting this way? Is this reaction justified?
Well, the answer is yes and no. Because, the market typically discounts long-term earnings. While FY23, prima facie looks to be in fine fettle because, most of the companies are sitting on very healthy order and the pipeline is still looking strong. But what we don't know, in fact, from the market perspective and in fact, from the perspective of most of the sectors, is whether there's going to be a hard landing or a soft landing. As US keeps on hiking interest rates to battle inflation. Suppose if it is a soft landing, that US Fed succeeds in, reining in inflation with a rate hike, with a front-loaded rate hike, then that's like an ideal outcome. but the probability, nobody knows what's the probability of that outcome. Of course, there is also a probability that this could lead to deep recession. And in the event of deep recession, nobody is going to be spared. Corporates are going to feel the pinch, and definitely there will be some kind of a slowdown. Okay. So, yeah, to answer your question, whether there's an overreaction, there is a fear, but whether the fear is genuine, only time can tell.
Okay. Lots of questions coming up on our feed as well pertaining to the IT space. We have Kamalaja asking you about HCL Tech versus Tech Mahindra. Another viewer, Kalaki Murthy, wants to know your view on Wipro. Dr. Naik wants to know about Coforge, Tech Mahindra for the long haul. But does MC Pro have any favorites, within the IT space? After this correction, any of the names, stronger players that look attractive?
See, our view on IT, to summarize it, is the following. See, there is a genuine concern that, tech budgets may be lowered. But let us put it very straight. What could happen in the worst case scenario? Because before delving into the stock, let us take a sectoral view. See, the problem is tech spend is not going to go away. We are in the midst of a very strong upcycle in technology, and budgets, which was like going to be, extinguished in next 3-4 years because of the fear of recession, that could get elongated to maybe 7-8 years. So technology spending is not going to go away. What could happen is some moderation in technology spending should there be a deep recession. So that's the worst case scenario. So if there is a deep recession, there is a potential that multiples could contract further from the current level. Say, for instance, you take the bellwether, which is kind of TCS in the current cycle. TCS is still, trading at 25, 26 times 1 year forward earnings. That multiple could contract to 20 times or 18 times. That is a possibility should there be a recession. And that is where perhaps the bottoming out will happen. But having said that, coming to individual stocks, our view on Coforge is very positive. The company has been again in the leaders quadrant as far as growth is concerned. They are in the right verticals, very strong in insurance, strong in BFS, strong in travel tourism. All these sectors are going to do extremely well. But if you ask me the question, is there a potential for Coforge to correct further? Of course, if there is a general fear in the markets correct, yes, there is a possibility of Coforge correcting further, but that could be a good opportunity to pick up a very, very strong, fundamentally strong play like Coforge. Coming to the other sectors, I think Tech Mahindra has corrected enough. It has been one of the worst performing large cap IT stocks. And of course, there is concern that, 5G spending is a bit of discretionary nature that could get pushed out. But again, in correction, I think another 10-15% correction is possible. But yes, for the long haul, it's also a very decent play. HCL Tech, coming to that stock, I would say that IT service has been in fine fettle, but the product business is suffering. But they have an exposure to engineering also, which could feel the heat of a recession. So again, on correction, a good stock to own. Wipro, the only issue is with lots of acquisition, stitching the acquisition in the face of a recession could be a little bit of a challenge. And to that extent, although Wipro has also significantly underperformed, we don't rule out some further correction in that stock.
Okay. All right, Madhu. Thank you so much for joining in and helping us understand the big trends in the IT space and what to expect from, some of these stocks going forward as well. Let's get going and discuss some stocks that are likely to be in the spotlight today with Shrikant Chouhan of Kotak Securities. Good morning, Shrikant. I want to draw your attention first to Sterlite Tech. We were just talking about the IT space with our fundamental analyst. Talk to us about Sterlite Tech specifically, because this one could be in focus. They've acquired about, the balanced 25% stake in Jiangsu Sterlite Tongguang Fiber Company. They already held about 75% stake. So after this transaction, the company will become a wholly owned subsidiary of Sterlite. A stock that could be in focus. Talk to us about the technicals.
Yeah. Good morning, everybody. I think, the stock is consistently following to the a pattern of lower top, lower bottom. It is like in this particular trend since last almost 2 years, and after hitting the levels of 300, it is consistently falling. But at the same time, now the fall is like gradual, and it is started showing some divergence. So I'm of the view that now 140 or 130 is going to act as very good support for it. And till the stock is not closing below the mark of 130, we can expect upward activity in the market based on technicals. And the next level to watch out for would be 180 or 185. So certainly, if there is any long position or if there are any investments, then one should look for holding onto it.
Okay, all right. Let's also understand some other stocks in focus apart from, the IT space, which we've just discussed in great detail. Let's look at an Indian oil. They're looking to expand their capacity at the Digboi refinery in Assam from the current level of 0.65 MMTPA to 1 MMTPA. The estimated cost for this upping of capacity will be around 740 crores, and this project is expected to be commissioned by October 2025. So there's some time now, but high costs involved as well. So something that could keep this stock in the limelight, this entire corporate development. But IOC, in fact, we were getting some questions also on our feed earlier on in the show. If you could talk to us about how the technicals are playing out.
Well, for IOC, the view is that the stock has completed its correction somewhere around 60, 65 sort of levels. And after hitting those levels, it recovered back to the levels of 73. It was into that particular corrective pattern since November 2021. And technically, the stock has completed its correction. I'm to say now the stock can again rebound to the levels of at least 85 or 90 next maybe few weeks or months. So it will take time. It's not that we are expecting in a hurry, but yes, certainly we are going to see rebound in the stock. It's a good dividend paying company and available at important supports. And I always follow one thing, that if the PSU stocks have fallen to their important supports levels, or if they are corrected to their important supports, then certainly we should be buying them as eventually they give returns. So at current levels, the risk reward ratio is quite favorable for investors as well as for traders.
Okay, all right. Let's also talk about Minda Industries. This one also has, come out with an announcement that they've acquired 5.24% stake in Germany-based Freevo. They've acquired about 4.5 lakh shares, and they've invested close to 15 million euros to acquire a 5.2% stake in this company. Minda Industries, the chart has been very interesting. Last 1 month especially, the entire auto pack has been buzzing away, and Minda Industries has been no different. From 800 levels in the early part of May, right now the stock is close to 940. Talk to us about how this could pan out.
Yeah, and certainly the chart of Minda Industries is quite interesting, because here also the pattern is more or less similar. In the month of December, it was around 1250, 1260. From there, we saw gradual sell-off, and it went down to the levels of 800. Now it is into pullback mode, and overall auto space is doing well. So technically, we are of the view that it is going to complete its pullback somewhere close to 1100 or 1150, which is decent upside from current levels. Fundamentally, also a lot of all the brokerages having a buy view on the stock. Technically, also we are of the view that the stock is on the verge of crossing its crucial, important level around 960. So on the dismissal of that, we can expect further more activity. But broadly, we are of the view that it is heading upwards. So certainly, one can hold on to it, or even if there is any long position, or if really somebody want to buy anything, then Minda Industries is a buy with a stop loss around 880.
Okay. The last stock on our watch list today is MDT Technologies, the defense player. Promoters have offloaded almost 2% stake in the company, and yesterday we saw the stock tank quite sharply as well. And this transaction wherein the promoters have offloaded stake, it took place yesterday itself, 29th of June. Along with that, Fabmoor Advisors have offloaded about 0.2% stake in the company as well. So earlier they held about 1% in the company, and that has come down to 0.8%. MDT Technologies yesterday, of course, was pretty much under pressure. But how does the outlook look from here on the technicals?
See, for entire news flow is negative, and the stock technically has also broken its previous important support, which was around 1300. So it is consistently sustaining below the mark of 1300, which is negative. So the next level to watch out for would be 1100 or maybe 1050. It is finding resistance close to 1300, 1350 levels. So if there is any rebound because of any reason, then you should look for reducing long position in the stock instead of taking any bet at current levels. Or we should be buyer if there is any furthermore fall to the next important level of 1100 or 1050.
Okay. Lots of questions are also coming your way, Shrikant. So let's get started. Sanjay Chaudhary wants your view on MRPL. Its recent highs of about 120 odd rupees, the stock has cooled off a tad from there. So at the current level, close to 90 rupees, good time to buy, or should they wait for further decline?
I think it is better to wait because crude is finding resistance around 120 levels. Unless and until the Brent crude is not crossing the level of 120, I think it is going to remain under pressure between 120 and maybe even 104 or 105 on the downside. And this particular stock, MRPL, is correlating, or maybe it is in the direct relation with the rise in the crude prices. Yesterday also, after hitting the levels of somewhere close to 98, 99, we saw quick sell-off and stock closed to the lowest point of the day around 93, 94. So we are of the view that we should stay away from taking any fresh long position at current levels. Attractive levels are somewhere close to 75.
Okay, all right. Narendra Pandey wants to know your verdict on Manali Petrochem. Last 7-8 days, the stock has seen a good spot from 85, 86 rupees to almost 100 rupees levels. What is your sense here?
Here also, the overall activity is more or less similar to the formation of MRPL. Okay. But the stock is highly illiquid, and after hitting the levels of 140, 143, we saw a quick decline to the levels of 90, which is not positive because it has eroded almost all its gain, which it gained between the months of February to March. We are of the view that we should stay away from taking any long position at current levels. In fact, if there is any rise or any rebound from current levels, then close to 100 levels or 110, we should be a seller in the stock.
Okay. Let's also talk about HDFC Bank. Naveen has posted a query, and they want to know what are the levels to enter this particular counter. It did see a good uptake in the month of April, earlier on in April, but it has cooled off once again from there, from 1600 now to trading at 1340 levels. Good time to enter, or do you foresee further consolidation?
See, if there is a medium to long-term view, then certainly we should be buyer in HDFC Bank at current levels and more on dips, because eventually we are expecting stock to rebound to the levels of 1600 or 1650 based on its technicals, based on fundamentals. But in the short term or in the medium term, if we see the overall pattern of the stock, then it is finding resistance at higher levels and it is following to the broader trend of the market, which is under pressure. We are seeing lower top, lower bottom series for indices, and even for the Bank Nifty, and HDFC Bank is is contributing heavily in the Bank Nifty. FIs are also consistently selling in the market, and rupee is around 79. So we are of the view that we should stay away from taking any short-term view. I'm to say very short-term view. But if there's a medium to long-term view, then certainly we should be buyer at current levels and around 1270 or 1280.
Okay, fair point. But how does Bank Nifty look overall for the day? And today is a big day. It's expiry for the month gone by. So what kind of an action do you foresee here?
For the Bank Nifty, again, the view is same. Yesterday also, we saw some sell-off in the Bank Nifty, and it was underperforming to the broader market, and we say to the Nifty 50. It closed below the important mark of 33,600, which is negative. So the next level to watch out for would be 33,000. But if we consider the Nifty, then in case if we see any rebound in the market, in the broader market, then the Bank Nifty will also rebound to the levels of maybe 33,600 or 800. So we are not expecting any major activity in the near term. But yes, 33,800 should be the next level to watch out for. And on the downside, 33,000 is the level to watch out for.
What about the benchmark indices? If we look at HDFC Nifty, we're looking at a muted but a commencement of the trading session in the green, definitely. Do you think we can sustain that 15,800 today?
See, yesterday also when the market was down on the back of weakness in the global equities and crude was around 119 and bond yield was around 3.20. Even though all these negative flows or cues for the market, Nifty survived well above the mark of 15,670. 15,670 acted as very good support since March 2022. And yesterday when there was real, in terms of panic in the market, we saw a quick reversal from those levels, and eventually the market managed to close somewhere close to 15,800, which is positive. So we are of the view that till the market is not leaving the level of 15,670, it is going to rebound to the levels of 15,900 again. So if there is any lower opening, then we should be buyer with a stop loss around 15,670. Again, we can expect 15,900 or 950. So I think market is going to spend some more time between these levels, and on the day of monthly expiration, put call ratio is around 0.95 and India VIX is around 22. So it clearly indicates that the markets are oversold in the short term. So one rebound is possible in the near term.
Shrikant, I'm looking at your stock picks as well. 3 heavyweights that you'd like to recommend to our viewers today. Why don't you tell us what these names are?
Yeah, sure. I can see as we mentioned that the Nifty is very close to its important support area and it is holding above those levels since last 3-4 months. We are of the view that we should look for adding those stocks which are very close to their important support areas like State Bank of India, which is currently around 459, 460. It is trading above the important crucial trend line and support area of 455. So it's a buy at current levels with a stop loss at 450. Again, we can expect 475 or 480 on the high side. The other stock which we like is from the auto space, and that is Mahindra and Mahindra, which is currently trading around some 1100. Here also the trend is quite strong. In fact, Maruti is also indicating us that it is heading, it would rally to the next levels of maybe 9,000 based on its technicals. So broadly, I think auto stocks are going to do well, and in that we like Mahindra and Mahindra, which is around 1110. We can expect 1200. We can keep stop loss around 1050. And finally, from the IT basket, we like Infosys because here it is diverging positively. Here also the pattern is more or less similar to the pattern of State Bank of India because it is trading above the crucial supply line, which is positive. And we are expecting 1500, 1550 in the near term. We can keep stop loss somewhere close to 1420.
All right then. Thank you so much, Shrikant, for flagging off your personal picks as well and for helping our viewers out. As always, it's a pleasure having you on board. Guys, that's all we have in this edition of Morning Trade. Stay tuned to Money Control. Markets with Santo and CJ comes up next.